Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and talk about and figure out, well, what is happening with Tesla and the market itself and what we can expect moving into next week. So with that being said and done, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. The link is down below if you're interested for just $2.99. You get access to all my intraday thoughts, updates, options flows, technical analysis updates live as it's happening every single day, constantly, pretty much as the chart is moving. If I see something, right, that obviously I always share there first. But with that being said, let's just jump into it. Tesla closing the day down about 2% on the day, unfortunately, closing at about 168.5 per share, which compared to the market is definitely, an underperformance. Now, let's talk about what is happening today, right? So first and foremost, let's talk about yesterday's two candles, where we talked about how yesterday we had that inside day candle, but we talked about how we need follow through, right? This is why it's important. Whenever you see any potential bottom or top indicators, like, candlesticks or like a hammer candle, whatever, anything like that, right? Hanging man candle, whatever, any of those. The candle itself doesn't actually mean anything. All it means is the fact that this is setting up for a potential reversal, whether it's a bearish or bullish reversal. You want to see follow through, which is what we talked about yesterday. We need to see follow through. Unfortunately, we didn't see the bullish follow through that, I was hoping that we would see. And, and sometimes it is what it is. And that's what we talked about, both levels, to the upside and to the downside. Clearly to the downside, the level has so far been working, right? We talked about how if we do move over to the downside, the first support level to watch out for, that the bulls want to defend and the bears want to break, is going to be, of course, pretty much right exactly where we traded for like 80% of the day, which is about that 168 to 169 level. Why is that an important level? Well, first and foremost, on the 4-hour chart, you can see it is the gap fill, right? We have officially filled this gap, and we are essentially finding buyers. You can see right here in the 4-hour, pretty much exactly where this gap is, right? This is where the gap is at 168.25, right? Pretty much 168.3, we'll just to make it simple. And we're finding the buyers on both of these wicks. You can see here on the 4-hour chart, the buyers are stepping in right on that gap fill, and we're holding above that gap fill as well. So that's, not bad. That's a decent sign, right? That is at least good to see. Is that going to be enough? Well, we're not sure yet, right? Because there is, of course, we didn't close back above 170. What I would have liked to see is I would have liked to see this gap fill, buyer step in, and then close back above 170. That's what I would have, more ideal scenario would have been in my eyes. We didn't get that. So to me, it's showing a little bit more weakness than I would have personally liked to see. So what does that indicate? Well, to me, that indicates the fact that the possibilities of jumping down to the low 160s, 163 to 160, not completely out of the cards here. Like it's become a pretty realistic possibility. Now, will we actually see it? Nobody knows. If we start losing, for instance, on Monday, if we lose today's low, then that really increases the probability of coming down to the low 160s like I talked about. But there's a reason that these levels exist as well, right? On top of them just being natural support areas, whether it's a gap fill or whether it's just a support from the previous, trading of the stock, of course, which you can see here, it's been, several times right here, right? Another reason is because, well, today, at least, the level that we held, 168, 169 roughly, right, is that 0.5 Fibonacci retracement that we did talk about yesterday. That's exactly where we are closing at right now. Not the most convincing close for the bulls, I'll be completely honest, right? I would have liked to see at least a little bit more buying pressure come in. So, not convincing of a close here, not convincing of a gap fill hold plus 0.5 Fib retracement hold. Not super duper convincing. It could be enough. We'll see how Monday reacts, but it could have been better. I will admit it could have been better. Now, if we lose this level, if we pretty much drop below today's low on Monday, which is pretty much below, what was today's low? Let me take a look here quickly. Today's low was 167.75. So essentially, if we start losing that level on Monday, again, watch for the next level down below, low 160s, which is also the 618 Fibonacci retracement level. Yet another pretty crucial level. But with that being said, that is a level where if we do get there, I really wanted to hold there. I don't want to go much lower than that level. I don't want to be losing the 160s as well. That's where things are, not going to lie, it's going to start getting a little bit more concerning, less reassuring, right? It could still be a massive bear trap. It could still be a phenomenal bounce from there. I'm not saying it can't be, but if we lose 160s and we start going back into the 150s, potentially for this gap fill down here even, which was going to be all the way down in the 140s, it's not impossible. It's not impossible. And that, would still have us bounce off this green line on the weekly time frame you can see here. But I definitely wouldn't want to see that. Let's just say that. I'd rather avoid that scenario entirely if possible, because things will start getting a little more hectic down there, right? Let's just say that. So, but all in all, again, taking that Fibonacci retracement from this swing low over here near the 138 to the recent high we had almost at 200, right? You can see the 0.5 and the 0.618 levels. We're at the 0.5. level right now, 618 level is at 162. We'll just say something around 162. So that's the next level to watch out for if we do get it, right? The weekly candle, unfortunately, not the best looking weekly candle. But there's some good news here. So the bad news is the fact that, well, there's pretty much no buying pressure, right? We pretty much closed near the bottom of the week, which happened to be unfortunately today, because today was a red day and we closed near the bottoms of today. So that's not the most ideal scenario, right? Not really showing too much buying pressure, right? The weekly candle, or not the candle, sorry, the MACD did not officially have that bullish crossover. Remember on Monday we were talking about this, but I said, it's flirting with it and it's teasing it. And the reason I said that is because, well, there's a lot of time in the week and can still change. Well, it did clearly change. We did not get that crossover. So that's why, it ended up being a bit of a trap, right? But again, you never really know until the week closes. I still think it's looking pretty decent. The RSI, the MACD, the green line is still pointing upwards and it's definitely basing. So it's still not looking too bad. And it does look like a cross is imminent, but I do think it'll take probably another couple of weeks personally. That's just my opinion. Now, moving into the weekly chart here, the one thing I do like the fact that, we're getting on this week of selling pressure, right? We had a whole week of selling pressure is the fact that it was on some abysmal volume, right? Horrible volume. Like this volume is atrociously low, right? Very, very low volume. For instance, back here when we had a green candle, it was on also very low volume. And look what happened not too long after that. We sold off pretty substantially because it was, buying pressure on very, very weak, not convincing volume. Same with this. We're having some pretty serious selling pressure here with the candle in terms of the way it looks, in terms of the actual percentage of, gains, if you will, lost on the stock, right? For instance, we went all the way from this week at least. We went from, what is this, about 187 to about today, 167. We lost $20, right, roughly, which is about a 10 to 11% drop. But on very, very, very low volume. Like this is pretty darn low volume. This is some of the lowest volume we've seen in quite some time. If I mouse it over like this, you can see the only other day that matched this lower in volume is the one I just talked about, the green day. And we had the red day in a low volume right here, which ended up being this right here, which still ended up following up with some selling pressure not too long after. So we'll see how that plays out. But the point I'm trying to make here is the fact that usually when you see buying or selling on very, very like abnormally low volume, like substantially lower than normal, it's usually not a convincing move in that respective direction. In this case, to the downside, right? Same thing on the daily. If you go to the daily, you can see the volume. So we had the massive pump, and note that the massive pump was on increasing volume, especially the one we had in the 190s over here, increasing volume, substantial volume even, right, on that day. And ever since this correction has begun, and ever since we're essentially forming this potentially very, very deep descending wedge / bull flag, it has been on consistently lower and lower and lower volume. Very, very low volume. This is usually a sign of consolidation. And this is usually, believe it or not, a sign that, this is a bullish sell-off, if that makes any sense, right? It just means the fact that this sell-off is just a simple reset of the stock. And I keep saying that, and I mean it. I really do mean it. I still see it until I'm proven otherwise. And I would be proven otherwise if we start losing 160, in my opinion, right? But I still see this as just a simple reset and sell-off of the stock, that just to cool it off after that pretty substantial run up, to be fair, right? Again, don't forget, a lot of people, when we were at this candle right here, if you could look back at the video, everyone was telling me the fact that Tesla is going to continue running, because I don't know why, because some people said because NVIDIA ran up like that, so why can't Tesla just do it right now? Well, it clearly didn't. And instead, we're obviously getting the sell-off, which I still think is a good sign, because it's just consolidation, right? We're slowly bleeding off, which, okay, maybe not slowly, but we are bleeding down, and we are correcting, and we are doing it on lower volume. That's a good sign. That's a damn good sign, in my opinion. Now, if we lose 160s, maybe not so good anymore. But again, I still like the way it looks. I really do. Now, obviously, we lost this middle line right here. We lost 170. We lost this volume profile. So there is unfortunately some issues here, some signs of concern a little bit here, which is why, moving down to the lower 160s kind of becomes more realistic now, because we closed below 170 and that we lost that volume profile on the right over here. Not a fan of that, I'll be honest. Definitely not a fan of that. I definitely would have liked to hold that today. That would have been ideal, but we didn't. So that's why we're in a bit of a pickle here, right? I don't think we'll go too much lower personally. And again, if we do, I think 160 should be the low, but I don't think that we can go much higher just yet, which is why I still kind of go back to my original thesis of May being sort of like a sideways month. Like, I don't think May is going to be too much. I think May is just going to be more of like a sideways month, slow bleed month, and just kind of reinvigorate the stock slowly but surely for that push up in June, which is Tesla's best month historically, since the stock has been trading. Essentially, it's best month by far for Tesla. So doesn't mean it has to be the case this time, but just statistically, it is one of, if actually literally, its best month. So that's the way I look at it right now. The MACD is still looking bullish, right? Obviously, it's descending here, right? We definitely want to look for a bounce sooner than later, or else the MACD on the daily will start flipping bearish, which not something I'd prefer to see. Let's just say that, right? RSI, could be a little bit better. It's not the worst thing in the world, but it's not the best thing in the world. It's okay. Stochastic has officially, kind of cooled off over here, which is a nice thing to see. So the momentum can reignite hopefully off of this as well. So yeah, we're in a bit of limbo land here. I'm not going to lie. I still personally believe that the trading range is going to be pretty much right around this general area, right? As high as pretty much the low to mid 180s to pretty much as low as 160, right? I still think that that's going to be just that rough trading range that we're going to be in for potentially the rest of the month, or at least most of the month, right? This kind of general range like this, which I've been saying for a long time. The range I think is not the exact range I said before, but just that rough general vicinity. I've been saying that I think that May will be this kind of day, or month rather, where it's just kind of sideways action, nothing too crazy, just rebuilding that momentum. I still think that's the case, but I do think that come a week or two away from here, we should start getting that momentum swing back up to the north side, and I think Tesla will start looking a little bit more promising. Let's just say that's moving forward there. So with that being said and done, thank you so much for watching. Options flow was kind of all over the place. Right before the market closed, we did get a 531, which is just what 3 weeks out. 1.5 million put actually came in pretty much 40 seconds before the market closed. So that's interesting. Someone clearly thinks we're going down a little bit further. It's a 170 strike, so it is in the money. So they're a little bit safer on that end. But I think someone thinks we're coming back down to the 163s to the 160s based on this options flow that came in here. So we'll see if they're right or not. But with that being said and done, thanks so much for watching. Again, for the levels below, just watch for this 168-ish level to hold. If we lose that, 163 to 160s next, which is that 618 Fibonacci to the north side. I definitely think that this volume profile in the kind of 172, 173 range should now act unfortunately as a resistance. And if we get it back above that, we should watch out for the higher 170s, so like 177 to 180, and especially the low to mid 180s, like 180 to 185, right? Those levels are the main levels to watch out for now moving into next week. I'd be surprised if you go above or below those major levels, especially the top and the bottom end of those levels. But that's kind of the main thing I'm looking at, and pretty much the way I'll be roughly selling my cash secured puts and my cover calls. So yeah, thanks for watching. Let me know what you think down below. And as usual, I'll see you for the next one. Peace.